Welcome back. We are discussing global markets, oil, and the impact on different asset classes. Mansour X is the fund that we are discussing, and it is a proxy for what is happening globally, largely because of its exposure to the different asset classes. In studio, we are sitting with Mr. Nahashon Mungai, who is an executive director at Standard Investment Bank. He's also the portfolio manager for the Mansour X fund. Nahashon, I see now you're at $1 billion in terms of assets under management.
Yes.
That's impressive. The last time you were here was $500 million.
Yes, yes.
Okay.
Yes.
And you have your performance for last quarter was 24.45%.
That's correct.
And I know I was asking you during the break, you're only as good as your last performance.
Yes, that's the most scary part about that's where all the pressure comes
That's
from.
All the pressure. How do you do a return in this quarter now that we're in?
So one of the main things is, and right now this is our biggest focus, is actually just risk management. Okay. So I also have to manage investor expectations. I have to tell my investors that not only do I owe them a return, I also owe them, lack of losses.
Exactly.
So to speak.
All right.
So we have cranked up the volume on our risk management. A lot of our models are flagging out a lot of trades that would have preferred to get into.
Yes.
So we have internal models that will stop us from getting into asset classes if they exceed a certain volatility. So right now that also sort of reduces the universe of assets that we can trade, but this is for the well-being of the investors.
Okay.
Luckily for us, there are also outsized gains in some of the few remaining assets that more than compensate for the assets that you cannot actually trade.
Okay.
So what we think is that the fund should continue to give somewhat similar returns.
Okay.
And in fact, if the situation starts tapering off, then we might actually even outperform other periods.
Okay.
Yeah.
So when you're talking about risk management and your asset classes without infringing on any proprietary information,
yes.
How does this happen? Do you have an investment committee that is now meeting on a much more regular basis?
That's the thing.
Because
exactly.
of COVID? Or maybe you can walk us through.
Yeah, so typically our investment committee before this would meet like once a week.
Okay.
Now we literally meet every day.
Every day.
Every day. Because there's always something new.
Okay.
So you can imagine how before yesterday's oil price crashes, there's no way anyone would have assumed that that would have happened. Then today morning, again, now that's a crisis that you have to discuss.
Okay, so that was
So this is happening every day.
Okay.
There are outsized moves in a lot of asset classes, mostly due to just market dynamics. One of the biggest market dynamic right now is reduced liquidity in most markets. Mm-hmm. So you have the UK markets having less liquidity because of the lockdown. The same thing in Asia, same thing in Australia. Mm-hmm. And this creates certain very unique pricing inefficiencies, especially as markets are transitioning from one market to another. So whether it's London to New York, or Asia to Australia and so on. So this is happening, and this is something that we now also have to factor in that we did not have to factor in before. Okay,
that's very interesting. I've never thought about it in that way, because now all of a sudden the performance and activity and volatility in financial markets is heightened because of the lack of movement of the underlying physical assets.
Exactly.
Okay, that's very interesting.
Yeah.
And then in terms of exposure to different asset classes, do you have a cap in terms of how you manage the risk in that regard? Maybe you can walk us just briefly through this.
Yeah, so it's one of our most effective risk management tool. How we actually cap and use a very complex portfolio diversification technique to cap exposure to every single instrument at a certain amount. Okay. So what this means is, take this as a basket of investments. If a trader, sees that, we have an opportunity to buy gold, for example, and we think that gold, will outperform other assets, and he has a very genuine case where that is the case, our internal portfolio models will probably be like, even if you want to go at a maximum of this amount, this is, even if you want to go the whole portfolio into gold, the maximum you can do in gold is say 5% of the portfolio. Okay. By doing that, that limits any chances that if you are wrong, then the whole portfolio is affected.
Okay.
And that's how we do it.
What's the biggest exposure without whether, I don't know if you can tell me what the asset is, but if even though you can't tell me, what's the largest asset exposure percentage?
Off the top of my head, not more than 5%.
Not more than 5%. So it's it's a highly diversified portfolio.
Yes. And 5% would be, that would have to be
something
outperforming asset,
Okay.
because 5% is still pretty high.
Okay, interesting.
Yeah,
So
yeah.
which means you have very many underlying assets in this
Yes.
particular.
Yes.
Okay, then which means
Yes.
I'm actually taking
Yeah.
up too much of your time. Let's come to the end of this
Yeah.
show. Two
Yeah.
last questions.
Yes.
The first one being, when you're looking at investments in Kenya, I know it's limited, it's just equities and it's real estate, but when you look at Kenya
Yeah.
from a top down, bottom up,
Yeah.
what are you seeing with COVID and post-COVID? What should investors be privy to or cautious of?
Well, I suppose one of the biggest questions investors will have to ask themselves after this is something we've always mentioned to them: the payoff between returns and liquidity.
Okay.
Moving forward, investors will have to be very critical of how they invest, and do they look at returns without factoring in the ability to get out of those returns? Because a lot of assets that have been sold to the public in the for the longest time in an economy like ours have not been very liquid assets.
Okay.
Okay, and this would definitely be something that Kenyans will have to look at. Are there opportunities? Obviously, the economy is not coming to a halt.
Yes.
Okay, the economy will have to continue no matter what happens. So if you're looking at the stock market, I'm pretty sure there's some choice stocks there that you can get into, and Kenyans should start looking into those. The NSE also has an amazing product, the gold ETF.
Okay.
If I was an investor in Kenya, I'll be getting into that, because it offers you liquidity and also hedges you out in terms of what's happening globally.
Okay.
And I'd also be looking at moving forward, only being in real estate if there's actually value to be gained from it. So
Yes.
if you're doing some sort of value-added agriculture, for example, then that makes sense. But buying land for speculation, I think, is something that Kenyans need to tone down on.
Okay.
Yes.
All right. So final point, your parting shot in as far as global markets and Mansa X is concerned.
My parting shot is first quarter of 2020 was an extremely difficult period for most investors, but Mansa X still delivered a return.
Yes.
Okay, so this confirms what we've been marketing to our clients. It's really not marketing. We have been telling our clients that the best way to invest in any period is in a multi-asset strategy fund, because you can be able to not only squeeze out returns during difficult periods, but protect your capital. And this has been proven. So we expect that more clients should come into a fund like ours.
Mm-hmm.
And as I've always said, we expect more fund managers in this space to create products similar to this, where you offer clients real diversified solutions.
Okay.
Yeah.
So what I need to do is just to stop thinking hard and let you do all the thinking and execution.
Yes, please.
Okay, fantastic. Thank you
Yeah,
very much
yeah,
for
thanks.
joining us. That was Nahashon Mungai walking us through Mansa X and the fact sheet for the first quarter, what to expect, and really what has happened globally. So expect much more volatility as we go along. And I think we're in the time where you have to find a way to either process the information and find a way for it to trickle down to your investments. If that's not something that you're able to do, then it's certainly advised for you to get a professional to be able to facilitate this. And we have been able to speak to the Mansa X team, and that's maybe something that you would want to consider. Thank you for your time once again. See you tomorrow, same time. Good day.